Good morning and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the day with actionable trading strategies, sectoral trends and most importantly your queries during the course of the show. So please keep commenting on our live feed and we'll have your questions addressed by our technical experts. But before bringing our guests on board, let's see what the global handover looks like. European markets gained following a positive trend set at the end of last week, so that winning streak continued. Stoxx 600 climbed about 1.9%, with retail stocks jumping more than 4% to lead gains, as all sectors and major bourses traded in the positive territory. Wall Street notches smart gains ahead of crucial US inflation report. Most Asian markets are in fine fettle too this morning, and the SGX Nifty is hinting at a solid start above the 18,000 mark. Stocks in the spotlight today will be Ujjivan Financial, Ujjivan Small Finance Bank, Hdfc Life, Krishna Institute of Medical Sciences and Muthoot Capital. Meanwhile, India's industrial growth as per the IIP slowed further in July to 2.4% versus 12.7% in June. India's retail headline inflation rate returned to 7% territory in August from a 5-month low of 6.71% in July, putting more pressure on the RBI to hike interest rates again later this month. Okay, let's get going and discuss some of the big stories and stocks that are likely to be in the spotlight. First up, joining us is Osho Krishnan from Angel One. Hi, Osho. Talk to us about how the trade setup is looking and SGX indicating a start above 18,000. So, will that cheer continue on D Street?
Very good morning, Karunya. Well, looking at the overall sentiments in the market, we are very much bullish in this market because overall there has been a relief from the global bourses also. So that has given a boost to our market also. And looking at the SGX Nifty, where we have already crossed 18,000 levels. So we are expecting that 18,000 levels, 18,120 should be the immediate target that one can see in today's trade, followed by 18,200 because looking at the open interest data from yesterday's trade, we have seen a significant piling up of position in 18,200 call option. So that could be seen as the immediate hurdle or immediate target for on the higher end. On the lower end, we have seen the shift in the base from 17,500-600 to 17,700-800 now. So that has been a very positive sign, and we are looking very much optimistic on technical chart. Even if we will see the overall structure from the FII segment, then FIIs have also added a position from the last 1 week. Even yesterday also they have added positions in cash market as well as in future segments also. So that's a very positive sign. And Nifty is looking positive from here onwards. Approximately 18,120 to 18,200 could be the levels that one can see in today's trade.
Okay, all right. Osho, request you to stay on with us while I bring on board my colleague Siddharth Upasni to talk about the macro data that trickled in last evening. Hi Siddharth, good morning and thank you for joining in. Let's talk about the big headline numbers. Retail inflation back above 7%, and this is higher than what we were estimating according to the Moneycontrol consensus poll. 3-month downtrend stalls, CPI is back about 7%. Talk to us about what's happening here. Is this going to be an aberration or is this going to be the norm for the coming months as well?
Morning, Karunya. Our poll said that inflation would come in at 6.9% in August. So it's only slightly higher, 10 basis points, give or take. The July number was 6.71. So when you look at it, inflation is not significantly higher than what was expected or what it was last month. But what has really sent concerns are the drivers. The drivers have been higher food inflation, which includes cereal prices, pulses, and vegetables. And while the government has taken steps to impose restrictions on the export of, let's say, rice, the prices so far in September have shown an uptrend anyway. So this was not a one-off. The August print is not a one-off. Economists are expecting the CPI inflation to rise again to anywhere between, let's say, 7.1, 7.3% in September. So again, not a significant increase, but we might not go back to the April's peak of 7.79%, but it doesn't look like inflation is coming below 6% anytime soon.
Yeah, because, CPI has spent about 35 consecutive months above RBI's medium-term target, which is 4%. It's outside RBI's 2% to 6% tolerance range, at least for 8 straight months. If this trend continues, obviously it puts much more pressure on the RBI to tame inflation. They may have to submit a report as well to the government, right, stating the failure of this forecast. So talk to us about what happens next and what course is the central bank likely to take?
So there are really two things here. One is the failure itself. I think it's been pretty clear for roughly 3-4 months now that the RBI is going to fail to meet the inflation mandate. Going by its forecast for the July-September quarter, inflation is seen at 7.1%. Now, the RBI is deemed to have failed when CPI inflation is outside the 2 to 6% tolerance range for 3 consecutive quarters. The first quarter of 2022, that's January-March, inflation averaged 6.3%. April-June, it was 7.3%. We are on track for just undershooting the RBI's target of forecast of 7.1% by 10 basis points or so. So that the RBI is going to fail is as good as a given. Unless CPI inflation somehow falls to 4.1% or so in September and brings down the entire average for July-September to under 6%, the RBI is going to fail. There's no doubt about that. And the RBI has been aware of that too. It would be wrong to deny that. As to what impact this particular number has on monetary policy, the impact seems to be at the margins, really. Like I said, the drivers of inflation this month have, while people expected food inflation to increase, food inflation has actually gone from 6.69% in July to 7.62% or so in August. Now, that's a 100 basis point, roughly 100 basis point jump. And you have, let's say, I was just coming back to the drivers again within food. Cereals, the price of the inflation for cereals is 9.67%, which is the highest in roughly 8.5 years since January 2014. Vegetable inflation has gone up to 13%. But what you really want to look at is the month-on-month progression in prices. Cereals, the index for cereals, which is the index, that's the index for cereals within the CPI. That's gone up by 2.4% in August compared to July. Index of vegetables has gone up by 2.5%. The index of pulses, another driver of prices in August, has gone up by 1.7%. So this is not, if this and September prices, like I said, have shown an uptick.
Right.
So the second bit about what this does for the RBI, at the margin, people who economists who were perhaps expecting 30 to 35 basis point of rate hike at the end of the September 28th, 30th meeting of the MPC, are perhaps now edging towards a 50 basis point hike. Okay. So it's really a 10-15 basis point increase. But on the whole, I think there hasn't been a significant change in the terminal repo rate view. So people are still looking at 6% or so, maybe slightly higher than 6% by the end of 2022 or towards end of FY23. So that hasn't changed significantly. If we look at the minutes of the last meeting, external member Jayant Verma of the MPC, he had said that 6.5 might be too high a terminal repo rate, but 5.4. He indicated somewhere it'll be between 5.5, 5.4, and 6.5. So that's what that seems to have continued. There hasn't been a significant shift in that.
Inflation number clearly is not looking good. You're saying that RBI could get more aggressive with their rate hikes. IIP growth also came in yesterday, and that also came in at a 4-month low of 2.4%. Base effect, of course, is continued to normalizing. But talk to us about how this will all go down with the street. I mean, is it all gloom and doom?
At the moment, it's really difficult to say much about IIP because the base effect has been so strong. If you recall, last year, May, the second wave was running rampant, lots of restrictions on activity and movement. So that created a huge low base for this year's IIP numbers, which is why if you May 2022 IIP growth was almost 20%, and that's been coming down since then. So the the fall in IIP growth has been down to largely down to the waning of the base effect. What is also must be considered is that the general index of the IIP. So if you look at the sequential movement of the IIP, that has come down by around 2.7, 2.8% in July compared to June. Now, this is perhaps slightly greater decline, month-on-month decline, than usually seen in the month of July. I think, if I remember correctly, the monthly declines are usually in the range of 1% or so. So this is perhaps slightly greater than what usually happens. I'm talking about pre-pandemic years, of course, because the pandemic years, there has been a huge jump in the index from month to month. So this is perhaps the fall in activity, industrial activity has been greater than expected. Of course, mining activity, because of monsoons, that's taken a hit. Mining output contracted by 3.3% in July. So the number is on the lower side, but I would suggest that taking IIP numbers with a pinch of salt.
Okay.
The base effect has been so large that it's really difficult to pass judgment.
Okay, thanks much, Siddharth, for breaking down these numbers for us and telling us what it could mean going forward as well, and how the trend could also play out for the rest of the year. Okay, let's shift gears and talk about the markets. Once again, Osho is standing by. Osho, a lot of news flow coming in, especially as far as fund action is concerned. So a lot of stocks that could be in the spotlight today. I want to start with Ujjivan Financial Services and Ujjivan Small Finance Bank, both of these stocks. For financial services, Duro India and Duro One have bought additional 0.7% stake. As far as Small Finance Bank is concerned, they have launched a QIP for subscription. The floor price is fixed at close to 22 rupees a piece. Now, if we look at the stock prices, solid 25-30% run-up seen last 1 month from both of these names. Can this upward momentum continue going forward?
See, looking at the Ujjivan Small Finance Bank, we can see from here onwards, we can see another set of a rally. But as you mentioned that the stock has already given a very positive move from the levels of approximately 20 to 25. So we might expect that this counter might cool off a bit towards 21, 22 levels in the near term. And again, the rally should continue because on technical perspective, it has reversed from the lower lows and it has started making or the initial sign of the reversal has been seen in this counter. So we can expect Ujjivan Small Finance Bank to surge upward towards the level of 28 to 30 on a very short-term time frame. For a longer time frame, we again need to review the counter once it breaches above the levels of 30. For Ujjivan Finance is actually looking very positive because it has seen a single-side rally from the levels of nearly 120 and it has moved towards 230 levels. So it has seen a vertical rally, and from here onwards, we can expect, because the resistance is near to approximately 240, 245 levels. So from here onwards, we can see another set of rally towards 245, but we have to be cautious in this counter because the vertical rally has been seen in this counter. So there could be a certain cool off that could be seen in this counter. So better we should wait for a certain dip, and then we should again accumulate this counter from short to medium term perspective.
Okay, all right. Moving on to the next stock, which is Hdfc Life, and I'm picking up a cue here from a story reported by CNBC TV 18. Sources have told them that Aberdeen PLC will be selling about 4.3 crore shares, close to 2% equity in the company via block deal. Aberdeen, via this transaction, could end up raising around $300 million via this particular share sale, and after this, of course, their equity holding will come down. Currently, they hold about 3.7% equity in the company, and if they are selling that 2%, it could come down to 1.7% stake. Talk to us about Hdfc Life's technicals, because again, a slow mover among its peers and in the market overall as well. It's not caught up with the momentum seen overall. Largely range bound last 1 month. Will that flattish sort of move or flattish sort of trend continue?
See, as of now, this counter has been one of the laggard from the peer companies as compared to the peer companies, and we are not very much bullish in this counter for the timing, but technically this counter has seen a kind of reversal and it is on a very strong note also, but we are not witnessing any kind of traction in this counter in terms of volumes or new participations. Hence, this counter could see a good rally above the levels of 620 only. If it crosses 618 to 620 levels, then we can see another set of rally towards 680 to 700 levels. But till the time it does not cross 618 on a decisive manner, there could be some kind of consolidation that can be seen in this counter. But no doubt, on the downside, the support is very nearby. That means it is on a very consolidation zone. It is preparing a base setup for itself. So we can expect that the base setup is near to 550, 560 levels. And on the higher side, 620 should be the immediate resistance. Once it crosses beyond the range, then we can again review the counter for a short to medium term time frame.
Okay. Again, the next stock I want to flag off is likely to be in focus on back of fund action. Muthoot Capital, BNP Paribas Arbitrage has bought 1.5% stake here, close to 2.5 lakh shares at a price of 196 apiece. And the seller in this whole transaction is Elevation Capital, FI Holdings, which has sold 3.6 lakh shares again for 196.5 rupees apiece. Talk to us about Muthoot Capital's technicals, because if I look at the last 1 month chart, it has seen its highs and lows, but in terms of returns, again, very flattish.
Yes, overall, the technical perspective for this counter is still on the downtrend.
Okay.
Because if you will see the overall fall, it has started falling from the levels of 350 in the recent period, 350, and from there onwards, we can see that it has tested the levels of 150, 160 odd zone. And from there onwards, in past 2 months, it has recovered a bit, but there has been not very significant as we compare to the overall broader market. So there has been some kind of laggardness attached to this counter. Technically, this is still in the downtrend. The reversal has yet is still pending as of now. So we can expect that this consolidation or the sideways movement can be continued. For technical perspective, the support, immediate support could be seen around 188 levels, while on the higher end, the resistance is at 240. So that's a very huge gap. So once it crosses above 240, then we can see a kind of a reversal in this counter, and then we can approach for a buy or accumulation in this counter.
Right. Okay, let's quickly move on to some of our viewers' comments and queries as well. The first one is from Rajesh. He wants your long-term view on Dynamatic Technologies. How is it looking on the charts?
Overall, the counter has seen a kind of a bullish movement from the past 2 months, because from 1800 levels, it has went towards 2260. And as of now, it is looking positive because overall, the overall mid-cap and small-cap IT companies are on a verge of seeing a reversal. So from here onwards, we can expect that this momentum should continue towards the level of nearly 2600 levels for the short-term time frame, while on the downside, 2050 should be kept as a stop loss if it is for a short-term investor. Else, this counter can be held for medium-term perspective to retest the all-time high of near to 3200 levels.
Okay, all right. Let's talk about two names from the fertilizer space. Varun has written to us and he wants your view on Chambal Fertilizer, and Rahul has written to us, he wants your view on UPL. How are both of them looking? Last 1 week has been quite resilient for both of these names, but any of these look stronger than the other?
See, overall, looking at the overall space of fertilizers companies are performing very well from 2-3 days. It has gaining traction. Chambal Fertilizer on the technical chart has given a breakout, which is obviously on a volume based breakout. So we are expecting that this should continue near to approximately for a short term time frame. 382 should be the immediate resistance that can be seen in a very near term period. So no doubt this counter is looking very attractive for a trader as of now. And UPL has also seen a sign of reversal from its exponential moving average. So it is also on the verge of having a strong gain near to 810, 820 levels in the short-term time frame, because the reversal has been seen from 200 exponential moving average. So from here onwards, UPL and Chambal Fertilizers both are looking very positive. Chambal Fertilizer has given a breakout. So it should be kept more on the radar of a trader. And UPL is on the verge of giving a reversal kind of a pattern. So this could also be seen from short to medium term time frames.
Okay. Quickly addressing the last query, Funny has written to us and he is asking which defense stock looks attractive at the current levels. Any names that one can add to their portfolio?
See, overall, HAL has already outperformed the market. It has seen a strong rally, but we can witness that BEL should also follow the rally, because although it is also in the higher highs, higher lows pattern, so it is also on a very vertical up move. But from here onwards, we can expect, because there has been some kind of consolidation near to 325 zone, and yesterday it has gained a traction of nearly 3.5%. So from here onwards, we can see that this counter should test 350, 360 in the near term period. And for overall longer duration, BEL and HAL both are looking very positive. Both can be seen for investment purpose.
All right, okay. What about your own preferred picks? What are the stocks that you are keeping on the radar?
The first one is Chambal Fertilizer, which I have already mentioned, because Chambal Fertilizer has seen a volume-based breakout. So we are expecting that this should continue on the higher end. 382 should be the immediate target for short-term trader. And for trader, it is better to keep a stop loss of 353, which is the recent swing low. So from here onwards, we can expect the momentum to continue in Chambal Fertilizer. Overall, space is looking very nice. The other one is McDowell. McDowell has seen a strong recovery in yesterday's trade, because if we will see from 200 exponential moving average, it has recovered a strong move of approximately 3.7% and also has seen a positive crossover. So this could be seen as a strong candidate for the maybe 1 to 2 days time frame. Upside target should be given around 878 to 880 levels, and on the downside 812 should be kept as the stop loss for short-term traders.
Okay, all right, then I hope our viewers have taken note of that. A buy call on McDowell as well as Chambal Fertilizers. With that, we're going to wrap it up. Osho, thank you so much for joining in and helping our viewers out as always. Pleasure having you on board. With that, it's a wrap on the show. Thank you so much for tuning in. But keep it with Money Control. Markets with Santo and CJ comes up next.